is that an aggressive trader has more opportunity for stops and for profit. Now, I don't want you to gloss over this by thinking you have more opportunity for profit. Because it's one thing to talk about having to take more stops. It's something entirely different to actually go and take them in the marketplace. So please remember this, that if you are an aggressive trader, while you may have more opportunity for profit, you are also going to have to realize you are going to take more trades, which means you have the opportunity to get stopped out more often. And when you look at trend traders, and there are a number of books that have been written about trend traders, a number of books which have been written about the turtles. Michael Koval has one which I have not read. Curtis Faith has one which I have. But both authors talk about how the individuals who trade the best as trend traders are the ones who realize that drawdowns are a nature of the business. In fact, there's a company called Dunn Capital, and I'm trying to secure the rights to rebroadcast one of their corporate communications where they detailed out that they routinely took 30% drawdowns. Okay, now this is a company that has hundreds of millions, if not billions of dollars under management, and they will routinely lose 30% in a year at some point. That's the nature of trend type of trading. Okay, so let's talk about, we've talked about the weave. We've talked about getting in on the sideways action as an aggressive and as a conservative trader. Now, as we're observing the market and we're looking for hands, well, the reason why we want to take trades in the direction of the hand, okay, see this hand is pointing down. It's like you had your hand here. You'd have the pinky, then the ring finger, the middle finger, the index finger, then all the way down for the thumb. Okay, the hand would be pointing down. The reason why we're taking trades in the direction of the hand is it has to do with the way the market just likes to move. And as the market is making new lows, okay, remember the definition of a trend is lower lows. We're simply going with that momentum. Okay, so here, let's go ahead and point out all the hands. We have a hand here, right? 2 higher lows. We have a hand here, right? 2 higher lows. We have a hand here. Well, almost. We need one more. Okay, so we have 1, 2 hands on the downside. Now we have one hand there, right? 1, 2 lower highs. 1, 2. Over here. 1, 2. 1, 2. Now, look over here. Do we have there? Well, we've got 1, 2, 1. Nope, not quite. So the hand is not here. It's right there. Whoops. Got crazy. There we go. Right there. 1, 2, 1, 2. Now what about this one? We have a hand there as well, don't we? 1, 2, 1, 2. So there we have several hands all in this area. Now this is very typical of when the market starts to begin the weave. Now you can see here at the end is when the market starts weaving. So as soon as the market starts doing this, this is when I expect a move, a big move, one way or the other. Boom, market breaks to the upside. So as the market was moving up, broke through this hand there, giving us an entry, broke through this hand, giving us an entry, broke through this hand, giving us an entry, and then finally stopped us out right there. So the first trade was 8,300, call it 8,320, and it stopped out